Tesla invites investors to ask and upvote questions for Q1 2023 earnings call. Tesla has invited investors to ask and vote on questions they would like to discuss during the Q1 2023 earnings call. The company's management will answer top questions from the voting results. Tesla will post its financial results for the first quarter of 2023 after market close on Wednesday, April 19, 2023. At that time, Tesla will issue a brief advisory containing a link to the Q1 2023 update, which will be available on Tesla's investor relations website. Tesla management will hold a live question and answer webcast that day at 4:30 p.m. Central Time, 5:30 p.m. Eastern Time to discuss the company's financial and business results and outlook. Tesla is working with Say, a shareholder queue and a platform to get the investors talking. Shareholders have to link their brokerage account with the platform, after which they will be able to ask their questions. At the time of this writing, more than 3,600 shareholders, representing more than 2.5 million shares, have already taken part in asking questions and/or voting. However, this is a relatively small number of shareholders, so the top questions may still change closer to the date of the earnings call. At the moment, the top 5 questions by the number of shares. 1. You previously stated a goal to reach 80% of the Tesla car owners with Tesla insurance. When will the goal be met? What is the adoption rate of Tesla insurance where it is available? What is the average annual savings over third-party insurers? 2. Can you give updated specs and pricing for Cybertruck, and any new features that will make it to production? 3. Do you still believe Tesla Energy will be bigger than Auto, and when will you provide more formal guidance on Megapack and overall Tesla Energy? 4. What is Tesla's plan to fully take advantage of the Inflation Reduction Act (IRA) across your entire product line including Auto, including Cybertruck, Energy Megapacks, and charging? 5. Are your cost reductions and deflationary input prices on commodities outpacing auto MSRP reductions to your liking now and for the foreseeable future? Source: reposted and summarized from Eva Fox at Tesmanian. My take. Some good questions here. What would you ask Elon? Tesla Model 3 Performance gets 14% price cut in Hong Kong. Tesla continues to cut the prices of its vehicles worldwide. Next up is Hong Kong, where the Model 3 Performance will get a 14% price cut. Tesla is also expected to reduce the price of the Model 3 Long Range, Model Y Performance, and Model Y Long Range in Hong Kong. Local Chinese media reported that Tesla is expected to cut the Model 3 and Model Y prices in Hong Kong by April 15. Besides the Model 3 Performance, the American EV maker is reportedly planning to significantly reduce the Model 3 Long Range's price by 11%. The Tesla Model 3 RWD's federal tax credit gets reduced to $3,750. Tesla is also planning to reduce the price of the Model Y Performance by 9% and the Model Y Long Range by 8%. The cost of Tesla's Model 3 and Model Y RWD variants will remain the same. As of this writing, the price of the Model 3 Long Range in Hong Kong is $52,362.25, while the Performance variant costs $56,337.20. The RWD Model 3 starts at $43,469.59. Meanwhile, the Model Y Long Range currently costs $55,585.53, and the Performance variant starts at $57,483.82. The RWD Model Y costs $46,769.30 before options. The estimated delivery times for all Model 3 and Model Y variants, including the RWD versions in Hong Kong, is within Q2 2023. Source: Reposted and summarized from Maria Marano at Teslarati. EPA launches new pollution standards that would kick EV sales into overdrive. The EPA today announced new pollution standards that would likely kick electric vehicle sales into overdrive. The new standards are aimed toward creating healthier communities by cleaning up the air, making things like cardiovascular and respiratory illnesses less likely, as they would cut CO2 emissions substantially through 2055. The new standards apply to light, medium, and heavy-duty vehicles, and build upon the already existing emission standards for the light and medium sectors. EPA expected to drop bombshell ICE vehicle regulation. The first set of proposed standards announced on Wednesday is referred to as the multi-pollutant emission standards. For model years 2027 and later light-duty and medium-duty vehicles. Between 2027 and 2055, the standards are expected to avoid 7.3 billion tons of CO2 emissions. This would help reduce the presence of fine particulate matter that could cause premature death, heart attacks, respiratory and cardiovascular illnesses, aggravated asthma, and decreased lung function, the EPA said. The proposal would project that 67% of new light-duty vehicle sales and 46% of medium-duty vehicle sales would be electric by the model year 2032. The light-duty standards alone would reduce projected greenhouse gas emission levels by 56% when compared to the May 2026 standards. Meanwhile, medium-duty vehicle greenhouse gas levels would reduce by 44% when compared to 2026 model year vehicles. Heavy-duty vehicle emission standards would help avoid 1.8 billion tons of CO2 through 2055, an equivalent to eliminating all greenhouse gas emissions from the entire U.S. transportation sector for an entire year. By proposing the most ambitious pollution standards ever for cars and trucks, we are delivering on the Biden-Harris administration's promise to protect people and the planet. Securing critical reductions in dangerous air and climate pollution and ensuring significant economic benefits like lower fuel and maintenance costs for families, EPA Administrator Michael Regan said. These ambitious standards are readily achievable thanks to President Biden's Investing in America agenda, which is already driving historic progress to build more American-made electric cars and secure America's global competitiveness. Other countries are also taking drastic measures to reduce greenhouse gases. The European Union released its Euro 7 emission standards, which are expected to rapidly improve the quality of the environment and increase the number of EVs on the road. Source: reposted and summarized from Joey Klender at Teslarati. Tesla Model Y was Germany's 1 EV and 4 best-selling car in March. Tesla Model Y was Germany's best-selling electric car in March, well ahead of its closest competitors. In addition, the electric SUV became the 4th best-selling vehicle among all powertrain types in the country. According to data from the Federal Road Transport Authority (KBA), 44,125 new battery electric vehicles, BEVs, hit German roads in March 2023. This is 28% higher than the result for the same month last year, which is largely due to Tesla. Of the 44,125 BEVs, Tesla accounted for 8,703 units, or nearly 20%. At the same time, Model Y accounted for 5,701 sales, Model 3 for 2,560, Model S for 313, and Model X for 129. Among electric vehicles, Tesla Model Y is well ahead of all competitors. With 5,701 sales, it firmly took first place. In second place is Volkswagen ID.4 and ID.5 with 3,212 units. In third place is Volkswagen ID.3 with 2,582 sales. Fourth place belongs to Tesla Model 3 with 2,560 units. Closing out the top 5 is Audi Q4 e-tron with 1,649 sales. Overall sales figures show that Tesla Model Y also became the top-selling BEV in Q1 with 15,851 sales. It is noteworthy that the car has more sales than its two closest competitors combined. In second place is Volkswagen ID4 and ID5 with 6,782 units. In third place is Volkswagen ID3 with 5,285 sales. Tesla Model 3 takes fourth place with 4,188 sales. And closing out the top 5 is Audi Q4 e-tron with 3,602 units sold. In addition to its success in the electric vehicle market, Tesla Model Y also became the fourth best-selling vehicle among all powertrain types in Germany in March. The electric vehicle was outperformed by Volkswagen T-Roc in first place with 7,524 sales, Volkswagen Golf in second with 7,253, and Volkswagen Tiguan in third with 6,010. Source: reposted and summarized from Eva Fox at Tasmanian. My take: this is such a common headline now that it is almost not worth reporting. Tesla broke not one but two important records in Q1 2023. The first 3 months of the year were eventful for Tesla, to say the least, with sweeping price drops and the announcement of a new Gigafactory in Mexico. Through all of it, Tesla has continued to increase its sales and production, clinching two significant quarterly records in Q1. Tesla shared its Q1 delivery results in recent weeks, showing that the automaker broke records in both production and deliveries, as detailed by Barron's. In the first quarter of the year, Tesla produced 440,808 vehicles and delivered 422,875 throughout markets around the world. Both figures outpace previous quarterly records set in Q4 for Tesla, when the automaker produced 439,701 vehicles and delivered 405,278. Wall Street analysts generally estimated Tesla would have around 420,000 vehicle deliveries in the first quarter, so the automaker narrowly outperformed consensus forecasts. Additionally, Tesla's shares were trading up over 68% at the end of the quarter, representing the company's top performance in Q1 throughout its short history, with 2012's first quarter seeing a 30% on share trading prices. In terms of quarterly share trading records, Q1 2023 is the sixth best of any quarter throughout the year, out of the company's 51 quarters total. As Barron's notes, strong stocks keep the stakes high for a company's financial results. This results in investors keeping a close eye on delivery and production levels, and other financial details, in order to keep up with trading expectations. Tesla bull and Deutsche Bank analyst Emmanuel Rosner rates the automaker's shares a buy, with a $250 price target on the stock. He forecasted roughly 416,000 units. The delivery target was reflecting still the uncertain macro environment after the price cuts, as well as competitive pricing responses in China, Rosner said. GLJ research analyst Gordon Johnson, who is bearish on Tesla, forecasted roughly 425,000 deliveries, rating the company's shares a sell and offering a price target of $24.33 on the stock. Analysts also looked at the difference between production and deliveries as a rough indicator of demand, with Q1's results bearing positive news for the company. Tesla built 17,933 units in Q1, with sales growing faster than production. If the difference between production and deliveries increases, then investors will view the spread as a demand issue, even potentially leading to a deceleration in production. At the time of writing, Tesla's shares are trading at $185.29, $7.29, down 3.79% from the day's open. With average analyst price targets sitting around $204, placing Tesla's stock value with management stock options at about $700 billion. Source: reposted and summarized from Evanex at Inside EVS. My take: Tesla will break lots more records in the years to come. Stay tuned. Tesla Semi appears at new Pepsi event. Tesla Semi appeared at a new event held by PepsiCo. The company welcomed 21 new trucks to its fleet, which became a tool to further the aggressive goals of Pepsi to decarbonize its business. Pepsi Tuesday held an event dedicated to its new fleet of 21 Tesla Semis, according to KCRA3. The company's Sacramento, California facility was one of the first metropolitan areas in the country to integrate these electric trucks into manufacturing operations. Another site where they were deployed was Modesto, California. Tesla delivered the first Semi to PepsiCo at a gala event at Giga, Nevada on December 1. These were 500-mile versions that could cover a claimed distance with a full load of 82,000 tons. Since then, PepsiCo has been using them for transportation between its Sacramento and Modesto facilities. The company said the Tesla partnership was made possible by a grant provided by the Sacramento Metropolitan Air Quality Management District, which paid for 18 out of the 21 trucks. The purchase of electric Tesla Semis has become part of other sustainability efforts, such as the use of solar energy and renewable water. It's critical for us. We've got some pretty aggressive goals to decarbonize our business, PepsiCo's chief sustainability officer Todd Skwarek said. By 2040, we aim to have almost 40% of our fleet decarbonized. Pepsi said one Tesla semi-trailer can travel 400 miles after 1 hour of charging. Tesla installed megachargers, high-power truck charging stations, at the Pepsi's Sacramento and Modesto facilities. According to the food and drink giant, one electric truck can cut as much greenhouse gas emissions as 302 passenger cars produce per year. Source: reposted and summarized from Eva Fox at Tasmanian.